Okay, hi everyone. Welcome to the World Economic Forum in Davos. We have a brilliant panel today on crypto at Crossroads. First, I'm Spriya Srivastav, International Executive Editor at Business Insider, your moderator for today. I'll introduce our panel very shortly. Just to say, this panel is keeping in line with the work done by the Forum on Digital Assets and Regulation. Two quick housekeeping notes. If you're watching, want to be involved, you could post on X with hashtag WEF25. And also, we'll have some time in the end for questions and answers. So please start thinking of your questions now. We'll open the floor towards the end of the panel. Great, so we have a brilliant panel here. I'm going to introduce the panel. To my left is Leseja Kanyoko, Governor, South African Reserve Bank. Next to him is Jennifer Johnson, CEO, Franklin Resources. Next to Jennifer is Brian Armstrong, CEO, Coinbase. Then we have Danelle Dixon, who's the CEO of Stellar Development Foundation. And finally, we've got Anthony Scaramucci, founder, Skybridge Capital. Welcome to you all. Crypto is back. It's dominating in Davos. It's dominating conversations. It's like Davos in 2020, 2021 again. I've had several conversations, whether it's lunches or dinners, where we've been talking about the state of the crypto market, the ecosystem. Today, we're going to explore it all. We're going to talk about the outlook. We're going to talk about the regulatory landscape. We're also going to talk about the prospect for digital assets. And also, we have a new president in the White House, and we will be talking about what it could mean in Trump's second era. Now, just want to start with a broad question for all of you, and I think maybe start with you, Governor. How would you describe the state of the cryptocurrency ecosystem that we have right now?
I would say, thank you very much. I'd say that the ecosystem is actually fairly dynamic, but it's volatile. It's characterized by rapidly moving technological innovation, and it has a growing interest from institutional investors and adoption by institutional investors. And this calls for a coordinated and comprehensive policy and regulatory responsibility. And what you then face is that you've got to accept that in many instances, regulators are struggling to come to grips with exactly what they are having to regulate. And so part of it is going to be a learning journey between the players and the regulators.
That's great. We will be talking about regulation, and it's great to have a central banker on the panel to talk about that. Jenny, what about you?
So I'd agree with most of those comments, and actually probably all of those comments. I would just add, what always surprises me, and at Franklin Templeton, we obviously are traditional finance, plus we've been pretty active in the crypto space. We have a tokenized money market fund. We're a node validator on 13 layer 1 and layer 2 platforms. I'm always surprised by how big the crypto space is, people who come to these conferences, names that you would know that would come to these conferences, and then how on the traditional asset management or even the traditional finance side, that there's literally blinders on to this massive growth in this community. And at some point, they have to come together. And I think the challenge is, from a regulatory standpoint, is that it's really difficult because it's very disruptive, but it's literally like two parallel universes kind of running together, along.
Ryan?
Yeah, in terms of the state of the industry, I'd say that it's the dawn of a new day.
Yeah.
You have to remember that the last 4 years in the US, it was a very hostile environment. I think the lack of clarity got weaponized, and some people in the government tried to actually, I think, curtail or kill the industry unlawfully. And so with a new administration coming in, I think we have a path to get clear rules, and we're going to have hopefully legislation passed through Congress, which will bring in a lot of new investment. And so crypto is really in its infancy. I think it's incredibly exciting. I mean, the ETFs have it's broken almost every record of new ETFs of Bitcoin money flowing in. Payments with stablecoins are on a tear. They grew about 300% year over year. In 2024, they did about $30 trillion in payment volume with USDC as a major player there, for instance. And I'd say about half of the Fortune 500 has some sort of pilot going in crypto. I mean, the largest financial service firms in the world, every fintech, Many of the neobanks are all integrating crypto. So this is a technology that's going to update the financial system globally, make it faster, cheaper, more efficient. And it's the long-term impact of this is that it's actually going to increase economic freedom in the world. If you want, we can come back to that topic. But to me, that's one of those important freedoms right up there with speech, which is foundational to all prosperity in society. And if we can actually inject good financial infrastructure to every country of the world for anybody who has a smartphone, plug them into the global economy, I think it's going to lift billions of people out of poverty, and it's going to be very transformational over the next couple decades.
That's great. Takes you to Janelle, who I think can comment on that quite a bit.
Yeah, I think it's growing. I also still think it's misunderstood. I think that there's not a lot of focus on the actual utility, the velocity of all of the assets, like what's actually happening on chain that's really transformational and getting to the points that Brian just raised. That's already happening today, and we don't talk about that as much. And so I think that there's just so much more to show out there, and I think that we're right now, because we're in this area where I think regulation is going to be more favorable in the U.S., we're going to hit this opportunity to really showcase all of the real work and to work more with traditional financial services, like with Jenny's company. Like Jenny's been like sort of in front of this, but others are going to move into this now in a much more aggressive way.
So I'll just add one thing. If you guys have an interest in regulation, I would recommend Diana Henriquez's book called Taming the Street. And it takes you through the formation of the SEC and how they built the framework of regulation in the United States. And what I like about the next administration is Commissioner Atkins, or presumptive Commissioner Atkins, is thinking about it along those lines. So he's going to talk to the Jennys and the Bryans, and he's going to work with the community to get fair and propitious regulation, as opposed to what we've been doing, which is shooting in the dark. And I think, I want to applaud Brian and Coinbase, because they literally went to the SEC and said, could you just tell us what the rules are? And of course, there was a lot of opacity to that. And of course, you won a court case where you had a federal judge say, hey guys, you have to tell these people what the rules are. And so we're going back to an old school framework, which I think will be very beneficial for the industry.
That's great. I'll come back to regulation, but one question that pops up is, everyone's suddenly talking about crypto a lot. There's this excitement. I know you said that it's still very nascent in terms of the market. What has shifted in the last few months? Is this the Trump effect? What's happening? Why is everyone back talking about crypto again?
Yeah, well, the underlying fundamentals are very good too. Don't get me wrong. I mean, the payment growth I mentioned, the ETFs, the adoption by Fortune 500 it's great. But I think the Trump effect cannot be denied here. To have the leader of the largest GDP country in the world come out undeniably and say that he wants to be the first crypto president, he wants the industry to be built in America, that he's going to direct every agency of the US government to work towards clear rules which enable innovation. This is unprecedented. And it's hard to deny that effect has, we just yesterday saw an all-time high price for Bitcoin at 109,000. I think that's largely due to the inauguration.
Anthony, did you want to weigh in on this?
Hey, listen, we have to call balls and strikes. It's probably not a great European analogy, but at the end of the day, I was there when President Trump gave this speech at the Bitcoin conference, and it was very, very clear if he won the election, things were going to change in the industry. And if you were on the side of the Democrats trying to support them, I was astonished at their reluctance to understand what was actually going on. And if somebody does write a history of this era, it'll be the era where Elizabeth Warren and Gary Gensler got together for some unknown reason. Some of us have some ideas about what they were doing, but they got together and they literally helped the Democrats lose the presidency, the House, and the Senate. And so it was very hard to communicate with them at that time what they were doing. But what I will say, and I have to respect Mr. President Trump for this industry is here to stay, and there are properties in this industry. There's companies like Circle, companies like Coinbase, Franklin Templeton, Stellar, that are going to advance the technological innovation in the world of transactions. They're going to speed them up, they're going to make them cheaper, and it's going to unleash an amazing amount of global innovation. And you got to give the president and his team credit for understanding it. And I also think we have put pressure on the Democrats now. The Sherrod Brown race in the United States set alarm bells off. And so for the Europeans in the room, Sherrod Brown was an 18-year veteran of the Senate. He was the head of the Senate Banking Committee. The crypto community, through the Political Action Committee, dumped $40 million into that race, knocked him into the woods. And that's very hard to do, to dislodge an incumbent with that level of power. And I think it sends a message to the Democrats as well that they need to be bipartisan with this. So I am very hopeful and very pragmatically optimistic.
Can I just add, too, that for the last 4 years, there's been this push from the crypto side to say we have to move out of the United States. We have to not focus on what's happening in the U.S. Part of the challenge to that is, of course, like the dollar is something like that everybody wants, and it's in such high demand. And so there wasn't really an ability to ignore what was happening in the United States, even though none of us liked the regulatory environment. And so I think that this is just a signal that like the importance is now clear, and we need to be able to create strong regulation that makes sense for the industry and for innovation, instead of trying to, whatever the reasons were for the challenges that we had for the last 4 years.
I think I'd like to jump in. I was getting worried about where the conversation was going and whether I belong here as a central banker.
I was going to come to you next.
Because it doesn't matter whether regulation is for crypto, whether it is for banking, whether it is for trade, whether it's for consumer protection, regulation has got to be clear, clean, and such that everybody could understand. So the notion that says that regulation has got to be clear and clean to facilitate is just not on. That is how you view all the regulation. That's the first point. The second point that worried me is the point that was made about how crypto went to fund to knock a politically elected person out of office so that they could get their regulation through in that manner. Mark my words, it will happen that some other grouping that wants to bring down crypto would do the same thing. And I do not think that is how regulation should evolve. Governments must set rules that are clear, that are transparent, and cut across, and not be geared around political parties that industry could throw resources because they do not like a particular approach of a particular politician or political party, and therefore we are going to throw resources to knock this one out or to keep this one in place. That, for me, is a regulatory capture. What we actually need is a society that frames conversations about how policies, how regulations should evolve, such that regulations are clear for everyone across industries, that this is how regulation is formed. If regulation is going to be established through the power of money, then we have the problem.
Okay.
We seem to have forgotten where we had come with the great financial crisis. And that said, let's be clear that it's important for society to create an environment for innovation to take place, that there is a level playing field, that similar activities are regulated in a similar fashion. And I think that, for me, is very important, that society rises above that.
That's great, Governor. And I think...
I've got to respond to that.
Yeah, absolutely. I think regulatory uncertainty, that still exists. There's still lack of clarity. How do you respond to, how do you navigate? So let's go to Jenny first. I think she raised her hand, then Brian.
So I don't know how it works in South Africa, but if you just, in the US, you take the securities rules. These rules were created as a reaction to the Depression and to the stock market crash of '29. So they were created in the 1930s and 1940s. The challenge is you need to be able to go back to what the purpose of the regulation was, which was consumer protection, and acknowledge that the technology is advancing so quickly that you can evolve regulation to meet the technology. That is a big challenge for regulators. But we have to be able to do that because it's going to take AI. All of these things are going to move so quickly that we have to remember the purpose of it and then adopt the rules.
Brian.
Yeah, I think what we saw in this last election in the U.S. is that there is a large group of pro-crypto voters. And there is no group of anti-crypto voters. And so this was a political opportunity. Trump realized that. Sherrod Brown found that out the hard way, which is if you're going to be anti-crypto, no one's going to vote for you because you're anti-crypto. There's a lot of people who are going to vote for the other party because they're pro-crypto. So in my mind, this is democracy working. Sherrod Brown, I go to DC about once every quarter, and we tried to meet with him many, many times just to understand his point of view, even to have a simple conversation. He always refused to meet with me. These grassroots organizations like Stand With Crypto, they got to about 2 million advocates who raised their hand and said they really care about crypto. They felt like their rights were being violated. They wanted to see clear rules in the US. This is not regulatory capture, by the way. It's just bipartisan legislation. You still have to get bipartisan legislation passed. So Stand With Crypto was a very bipartisan effort. But Sherrod Brown refusing to engage with the industry and to pass clear rules got him voted out of office, and so the crypto voter is real. That's democracy working.
This becomes, I don't want the discussion to be about the US.
Yeah, we'll move on from that, but yeah, go for it.
I don't want it to be about the US. I happen to participate in global regulatory standard setting. And I must say that it had happened so many times that the US would choose to opt out of what is being said globally. And I don't want to bash the US. Mm-hmm. What I want to say is, globally as regulators, we do set standards. And those standards we expect to apply across jurisdictions for the simple reason that Coinbase needs to be able to say, when I am faced with opening my business in South Africa or in the UK or this, there are certain fundamental rules that I would know that would not be violated because there is a global standard. I think that for me, that is very important. I do not.
That doesn't exist today in the regular.
Well, maybe not. But can I say that the Financial Stability Board had just put in stuff on crypto that we've been engaging with, and that maybe that's how the US works. I just want to tell you that in the case of South Africa, the regulatory approach is an approach that engages the sector, understand what products are emerging in the sector, and almost co-create a regulatory framework together with the industry.
Good.
And that for me is very important because
Governor, I think we'll move on because we don't have a lot of time, and I want to get to everyone. Jenny, I think you wanted to comment on that.
No, I was just going to say the big complaint about any global multinational financial services firm is you don't have regulatory consistency across the globe. So it doesn't exist.
Yeah.
Can I just add that, Governor, what you said is exactly what we all wanted.
Yeah.
We wanted rulemaking. We wanted there to be clarity. We wanted that to happen. That wasn't happening for 4 years. And I think that's the challenge. So I think that it wasn't about just trying to vote people out so that we get the policies in. It was trying to get actually the thing that you are articulating that happens in South Africa.
And thank you very much that the US is complaining to the emerging world to provide leadership.
Anthony, do you expect some of this to change in Trump era?
I mean, I'm just so glad we're not talking about the Trump meme coin. So just stay on it, Governor. Keep talking about the regulation.
That was next.
What was the question? I'm sorry. I was just thinking about the Trump. My profits in the Trump.
Do you expect, there is a lot of regulatory uncertainty out there. Do you expect more clarity to come through in the second era of Trump?
I do, and I think that it will happen quickly because there is a bipartisan commitment now. So if you talk to Senator Gillibrand or Tom Emmer or Senator Schumer, I think there's a big wake-up call. I think Brian is right. I think there are no anti-crypto voters. Elizabeth Warren had on her campaign website, I'm building an anti-crypto army. Do you remember this meme?
Oh, yeah.
And it was like, who's that? Okay, and I think people have now recognized, and so when you talk to these guys, and I do, and I spent a lot of time in Washington still, although I can only stay there for like 11-day periods and I get thrown out, but they will tell you, okay, that you're going to get the legislation, and you're going to get the legislation in their minds before the end of the congressional term. And remember, they want to campaign on it.
Yeah.
So this legislation's got to get done by February of 2026.
Amazing. Let's talk about the meme coin then. Both Trump and Melania launched their meme coin. It was on Friday. Within 48 hours, market cap went to $50 billion. I mean, it's bizarre to think that something that did not exist 48 hours ago suddenly is at the same market cap as the company Stripe. What are we looking at this? What does it mean to you? Is this the start of some sort of a bubble? Is it for real?
Can I just ask the governor, are they trading the Trump meme coin in South Africa or no?
Well, I'm just baffled about the approach taken. And here is my thing. I don't think it is for government or for regulators to tell financial consumers which products should come and which products should not be used. Our duty as regulators is to make sure that the products that are there are transparent, they are fair to consumers, and that consumers understand the products that they are involved in. It's not for governments to decide which product. In our space, we do not regulate product, we regulate activity. You can design your product. So if your product behaves like a deposit, we will regulate it like a deposit. It behaves like a lending instrument, we'll regulate it like a lending instrument. If it behaves like a payment a product, we will regulate it like a payment product. It's not for governments to decide, to even campaign and says, this product and not this product. I don't think that is the space that regulation should be in.
I think we need more financial literacy then. But going back to the meme coin, what is your outlook on that?
So I'll just say a couple of quick things. Number one, when you vote for Donald Trump, you get the whole thing. Okay, and so don't forget that. So he's pro-crypto, but then you're going to get everything that's associated with Donald Trump. And so, having a Trump meme coin, it could alarm some people, and other people that understand his personality are actually not alarmed, and they see it as part of getting the whole enchilada of Donald Trump. And so my only issue with it, and I asked this question at another event earlier. I said, well, who thinks this hurts the industry and who thinks it helps it? And it was sort of 90-10 that it hurts the industry. And I'll just make this statement. The reason I believe it hurts the industry is that you have older people in politics, older people in policy making that still do not understand the industry. Like this room to me makes me very bullish because it's not full. If this room was full, I'd start to get concerned because there's still people here in Davos that are not focused on what we're doing in this industry. And I want the people who are getting introduced to the industry to meet Brian Armstrong, okay, or Danelle or Jenny. I don't want them to meet the ideas behind the Trump meme coin and the potential negative things that are associated with the Trump meme coin. I just think it's going to slow down some people in the regulatory process.
Jenny, what do you think? It hurts the industry or it helps?
Don't answer that question.
Such a good response that Anthony gave. I have nothing to add.
Yeah, don't
Brian.
answer that question, Jen. Yeah. You're doing great in Washington, Jen. You don't want to answer that.
I don't have too much to add. I think you have to be a little bit careful when looking at new innovations because oftentimes they start off looking like a toy, right? Like if you remember the very early internet, there was a lot of blinking GIFs and silly cat photos, and it turned out to be like 20% of GDP, global GDP is now e-commerce, right? So memes are, you could think of them like collectibles, like baseball cards, or you could think of them like artwork. I think people should be able to create artwork and put it out there. And Trump happens to be the most famous person in the world right now, so that's probably why it rocketed up so quickly. So I don't know exactly how this will play out. I mean, memes are actually like kind of the currency on the internet of how a lot of ideas can concisely be communicated in a meme, and humor is a way for people to push against ideas that are no longer popular and sort of to make fun of them a little bit. So I actually think there could be a version of meme coins in the future where people are memes are going viral on the internet, but people aren't making money on it. And it's an interesting idea. Anyway, from a Coinbase point of view, we don't try to recommend any assets to anybody. We just have our listing standards. And to your point, anybody who meets the minimum listing standards, we let the market decide at that point.
Did you want to comment on that, Governor?
I agree. I agree that he agrees with me.
Okay, all right. Let's talk a little bit about, Jenny, I'm going to come to you because I think we've been talking about digital assets, meme coins, rise of crypto. How are traditional financial institutions like, Franklin Templeton and the likes of that, how are you adapting to this sort of rise?
I think you have institutions falling into two categories. So on the one side, and you got to remember, like if you think about what this is just a simple technology. What this technology does is it has a source of truth. It has ability to execute smart contracts. So things that we've written into a document, and somebody's got to go check and go settle and do this and that, can get programmed in, and it has a way to pay. That actually is a massive threat to huge financial institutions who act as those roles. And so what you have is a lot of sort of the traditional, you have some traditional firms who are merely trying to figure out how to leverage the technology to do what they do today. I'll give you an example. DTCC settles transactions, securities. They're working on just using blockchain as the source of truth in settlement. They should kind of be thinking about atomic settlement where the moment the trade happens, the dollars, the smart contract executes and the dollars transact. Because that's actually what's going to happen. And then I think you have institutions, and I think hopefully this is what we're doing at Franklin Templeton, is we're trying to sit there and say, okay, with this technology, imagine where you do have atomic settlement on transactions, where you don't need to validate. Oftentimes a bank is in between to validate the two parties. I know that when I trade with JP Morgan, that they're making sure that whoever's on the other side is going to pay me. They're standing in for that. If it settles automatically, you don't need that validation. So you have parties who are thinking about, what does atomic settlement mean to my business model? In our case, we built on the Stellar blockchain our money market fund, where we have the record keeping, and we're the only ones who are actually running a public transactions on blockchain. There's others shadowing it. We're actually settling them on the chain. And so over time, as you can start to have people making payments leveraging this yield coin, and maybe you hold it for 5 hours. Shouldn't you get 5 hours worth of yield? Like that's a challenge. Like that's a big technical challenge, but actually blockchain makes that possible. So we're thinking through, okay, well, what will that mean? And how does that evolve? And when it's peer-to-peer transactions, how does that evolve? In the asset management industry, costs have actually gone up in, I don't know, like the last 10 years, 80%, and revenues have come down 15%. So from an operating margin, that's not a great trend. We have to be thinking about how do we leverage this in our environment. I think ETFs, why should you buy an ETF today and have had the pricing lag by 2 hours, right? An ETF actually only prices twice a day, even though it transacts all day. Why shouldn't it go 24 hours? Why shouldn't the smart contract tell you exactly what those underlying holdings are worth at the time that you do a transaction? And so thinking through, I think there are firms who are actually trying to think through, what does this mean and how do I fit myself into this model?
That's great. And Danelle, Stella does a lot of work with this. We talked about it in a previous panel as well. What are the real world impact that you're seeing with blockchain and what Jenny was talking about earlier?
Well, one of the things, what Jenny's doing and what Franklin Templeton has been doing since 2019, which is insane to me because they were the first ones to the market with respect to this, and they were the first ones who went to the SEC. And by the way, that part of the SEC was actually working in the United States to actually get these things approved. But the fact that it is taking these assets and eventually, hopefully, I would love the idea to get these to yield-bearing assets to be able to be leveraged in payments because, frankly, that's what everybody wants. You want to be able to get interest on your money even when it's just sitting there for a few minutes. And so I think that that's a really, really important piece of it. What we see so much on Stellar, and when I talked about velocity instead of volume, there's so much focus on volume in this industry and how much volume is on the chain with respect to this asset. But really what the point of this technology is that you can actually move assets extremely quickly, peer-to-peer, and get them without borders all over the world. So it should be about velocity and usage. And that's what we see so much on Stellar, is we see people building all over the world and they can actually transact in, there's this one great story about this company, Decaf, who builds a wallet on Stellar where they're actually leveraging the USDC in Colombia, San Francisco, Colombia, so that they can actually pay gig workers there. These people now take the money, they can move it off chain through MoneyGram, they get their local currency and they spend it in their small town of San Francisco. And so therefore, they're able to create, we call it on-chain effects. So they get to be able to take the money, it gets used very quickly, it gets off-chain very quickly, but then it's used locally. So it actually improves the local economy. That's the value of blockchain. That's what blockchain does so beautifully. And we're seeing this happen all over the world. And we're seeing, just think about the UNHCR. They're delivering aid into Ukraine, into Argentina, leveraging the Stellar network. And for them, even though it's only been $5 million that they've actually sent through the blockchain, they've saved $12 million using blockchain technology versus all of their cash-based assistance. That's the value of blockchain. Also, the end user receives it in less than 3 minutes. They have to do the wallet, they sign up for the wallet, they register, but they receive the aid in their wallet in less than 3 minutes. That's crazy, but that's what blockchain does. And this is the part that we don't talk about and haven't talked about for so long because there's been so much negative attention with respect to this regulation, not just in the US, by the way, outside the US, but these are the kinds of things that help everyone in every country, and this is what we want to see more of.
That's great. Well, on that note, I think I'm going to open it up to questions and answers. If there are any questions, please also introduce yourself. Keep your questions brief. I think the gentleman at the back. You've got a mic coming your way.
I'm Jimmy Al-Kazem from Switzerland. The thing about blockchain, especially crypto, is that people don't understand that people use it more to speculate than to understand what crypto does. And I have a question for Danielle. A couple of years ago, last year actually, we talked about tokenization. And at that point, tokenization was not supposed to be regularized. We realized that. Is it still the case today?
What wasn't supposed to be?
Tokenization.
That's what Jenny's doing. Like securities, like we're seeing tokenization. The Stellar is the second largest chain with respect to asset tokenization, and we see it all over.
But it doesn't need government regularization.
Oh, well, it depends on whether it's a security.
Yeah.
I mean, I think that's part of the question. Part of the issue that we've been fighting for so long in the US to get is regulatory framework around digital assets. And just think about like the dollar-backed assets or the euro-backed assets.
Yeah.
We actually have regulation outside of the United States on it. We don't have it in the US. We're hoping to get that in the next 6 months.
Okay, thank you.
I think the gentleman here in the front.
Good afternoon. Gareth Jenkinson here. I'm the managing editor at Cointelegraph. I think I'll throw this at you, Brian, because there was no mention of a Bitcoin strategic reserve. This is one of the promises that Trump kind of made last year at Bitcoin Nashville. Obviously, we saw the Trump meme coin come out this weekend. In some way, shape, or form, this undermined the work that was being done to put forward a Bitcoin strategic reserve. Do you share that opinion, and do you think that this is still very much on the cards for the US going forward in the next year? Thank you.
Yeah, I don't think it undermined anything with the strategic Bitcoin reserve. That effort is still alive and well. Cynthia Lummis in the Senate in the US is really pushing that idea. And I think it would be a good idea for anybody who's not familiar with it. There is a proposal for the US government to start to hold Bitcoin. The U.S. government, like many countries, they hold reserves in a variety of different assets, gold, oil, rare minerals like palladium. And I think they have like maybe 27 different reserves. And so, many governments hold gold. I think they should start to hold Bitcoin because Bitcoin is essentially the new gold standard. It's, I think, a very core way that you should hold assets and hold value over time. And it's still nascent enough where it has some volatility. It's getting less and less over time, but it still has a lot of upside potential. So I think if the US gets that legislation approved, which I hope they do, the rest of the G20 will follow, and that could be a huge driver of Bitcoin price appreciation.
Governor, do you want to comment on that? Do you see South Africa going towards a Bitcoin strategic reserve?
No, I can't quite say. I want to distinguish between the technology that underpins these assets and the assets themselves. As a regulator, we do not regulate technology, we regulate activity. Mm-hmm. So we are technology agnostic. Right. So that's why I had said it's not for governments to decide which assets or which products the consumer should be using. So the technology is very useful. To give you the idea, we piloted a blockchain technology in our payment space with finality in central bank money, and we were able to settle transactions that we settle in a whole day in 46 minutes. We were able to do that. So the technology could be useful, and we would look at that, and I don't think that that is a problem. I would have a significant problem with a lobby that says governments should hold this asset or hold that asset without what the strategic intent of government is. Because you see, there is a history to gold. There was once a gold standard. Currencies were pegged to gold. But if we now say that, okay, Bitcoins, okay, what about platinum? What about coal? Why don't we hold strategic beef reserves or mutton reserves or apple reserves? Why Bitcoin? So it's a public policy issue that we have got to be engaged in, and I would caution against the move then that would say there is an industry with a particular interest in a particular product, and we would like to impose it on society and say society must hold this as a reserve. I would have a fundamental problem with it.
So why Bitcoin reserve and not beef reserves and mutton reserves? Anyone wants to comment on that?
Well, I think that if you like Neil Ferguson is here, he has a great book on the ascent of money, and he's a historian, and so many things have been used as money over the years. I think it's pretty, this is still maybe a new idea, but I think it's clear at this point that Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible, so you can actually use it. Has higher utility, I would say. And it was the best performing asset of the last 10 years. And so for store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of their reserves, but I think over time it'll come to be equal to or greater than gold reserves.
Okay, great. Well, let's go to the next question. Let's go to the lady over there.
Thank you. This question might sound very naive. I'm not from this space. My question is, who is really losing from the lack of regulation? From what I hear, the industry is flourishing and DeFi is there and more startups are working in the space and more tokenization and blockchains. So who's really losing?
Jen?
Well, I think the risk is you have a massive industry that is has both good traditional assets investments, and then also some that probably aren't. And there's no regulatory oversight or overview. Now, you can argue, well, maybe regulation is not necessarily a good thing, but if you assume that constructive regulation is good, you would actually like constructive regulation in the space. The challenge is there's a lot of innovation happening in this space, and it's hard for regulation to keep up with the innovation. But I do think that there's a risk. And what ultimately happens, like take our money market fund, there are massive stable coins out there that are completely unregulated that transact all over the world. Oh, by the way, the owners of the stable coin collect all the yield to themselves. None of that goes out to the participants. The moment the yield is paid out to the participants, that becomes a security and then gets regulated, and therefore there's been no growth. So I'd actually argue that billions and billions of dollars have been robbed for individuals by not getting the yield on their own money.
I mean, this is a welcome development for the sector to be calling for regulation, and I'm just so sorry that you had these frustrations where you tried to engage regulators and said we need regulation, and they wouldn't come with regulation. I think we must also spare the regulators, because sometimes they must understand what they have to regulate, and if you do not take them along, you might have a problem.
I think that's right, and I think that I think this industry has actually done a pretty good job of trying to take them along. But to get to another point on your question, what really loses when you don't have regulatory clarity, particularly when the regulators were very hostile, some of them very hostile to, at least in the U.S., to the technology, is the technology loses. And what we want to see is the technology and innovation flourish and grow. And so, yes, you now see lots of folks come into it. That wasn't always the case. I mean, I think everybody here can say that there was this big push to say, ignore the U.S. and let's move outside the U.S. and let's just forget like what's happening here. And you can't ignore the U.S. But there was a big frustration. So the technology is the thing. And we want innovation to continue globally, not just in the U.S. We want it to continue globally. And there's always going to be challenges managing the different regulatory environments, but it should never be about the tech stack. The tech stack shouldn't be the focus.
Let's go to the next question. I think the gentleman over there, and then I'll come to this side if you have any questions here.
Hi, thanks for the panel. My name is Yat. I'm chairman and co-founder of Animoca Brands, very active in the crypto space. I guess I have two-part questions for the panel. The first one is, when do you think we'll hit real mass adoption? We have about 500 million users owning crypto, but there's about basically 8 billion people in the world, so we still got a way to go. And then the second one, as an industry, what do you think we can do as an industry so we can build the kind of confidence that we can actually onboard the billions, and when do you think this will happen? Thank you.
That's a great question. So let's talk about mass adoption. Jenny, do you want to start?
Well, I actually think one of the challenges today is it actually, if you're, let's say you're managing clients' accounts and you're holding securities, ETFs, mutual funds, whatever it is, unfortunately, you have to build a whole separate infrastructure to be, wallet. By the way, those securities don't fit in the wallet. You need the tokenizations. And unless your clients are breaking down the door, frankly, they're opening up at Coinbase and they're sort of keeping two accounts. And so I think actually this lack of wallet has been one of the challenges that hasn't been integrated on the platforms across the board, and there hasn't been enough incentive to do it.
Did anyone else want to comment on that?
Yeah, I can add it in. So first of all, I think getting to 500 million users is exceptional, and we should celebrate that over the last 10 years. So I feel really good about the adoption curve is looking similar to early days of internet, and I think it'll get to half the world in 10 years or something like that, 10, 15, I don't know. The key pieces to get that adoption, in my mind, so one is that we need to make sure that traditional financial services are integrated with this. So we saw the ETFs get approved, and they were the fastest growing ETFs of all time, breaking every record. And so that brought in a lot of institutional money. We also need to get it working in emerging markets. And so there's great work that the Stellar Foundation is doing, and a lot of self-custodial wallets are becoming popular there. I think Nigeria is actually I think the most popular per capita country for crypto adoption. And so we'll see. I think that's one way to get to $1 billion is really the more emerging markets. The regulatory clarity will help. And I think one last one I would say is that we need to make crypto just easier to use, right? It's still a little too complicated. I mean, there's these addresses that they don't look like human readable. They look like random strings of numbers and letters that's being replaced by like an Ethereum name system as an example. So you send it to human readable names. The whole concept of private keys and potentially losing your money, this is a non-starter to get to billions of people, I think. So eventually I think we're going to have people using crypto. They don't even really know it's crypto underneath. They're just trying to send money, earn a living, get a loan for their business. Those are the things that they really want to get done, and use all this new category of applications that are getting built on the Web3 apps as well. So most people don't understand how electricity works, but they can flip on a light switch. I think we need to make it that simple.
And Anthony, do you think all of this will help in then building confidence?
Well, the one thing I would add is the stablecoin legislation, because I really do think if we get regulatory clarity on stablecoins in the U.S. and our central bank actually accepts that legislation, it will permeate into the other banks, and I think that will make it a lot easier. I think that uncertainty about that fungibility, that dollar fungibility, I think is caused a little bit of a slowdown. And I would just point out, good stablecoin legislation is good for the U.S. dollar. If you look at things like Tether or Circle, they own tons of U.S. treasuries, which is good for the U.S. I think Tether, I read that they own more U.S. treasuries than Germany or Japan. And so I just want you to think about it this way. We got the Morse code. We were sending messages at the speed of light, but we were moving the money by stagecoach and horses. Okay, we now can move the money at the speed of light. And so let's get the legislation right to match the innovation of the technology.
Can I just add one more thing
Yeah.
on that? I think privacy is also another thing. We need to get to the place where we were sort of stalled in doing any work on privacy because of concerns around Tornado Cash and all the issues that came up. We need to get to the place where we're actually focusing on that ease of use, the UX design, but also bringing privacy into it. And then it becomes easy for mass adoption.
Brian, we don't have a lot of time, just 1 minute left. So final question here for the panel. Start with you, 20 seconds each. We've talked a lot about Outlook, Trump, everything else. If we were to revisit this conversation in a year's time, what do you think would be the single most defining moment of the crypto industry?
Well, I think payments with stablecoins are having a real moment right now. Most people are still thinking about crypto as an asset class they need to put 10% of their portfolio, and that's great. But payments with stablecoins, they grew 300% last year. They hit $30 trillion of volume. I think they're going to grow at that rate or faster this year. That'd be my prediction.
Jenny?
Clarity around regulation. I think that there's a fear for traditional firms to get involved in the space because of what could ultimately have happened with retribution. So I think clarity will help them get more comfortable, and it gives a green light to say this is an area that you should look into.
Governor?
I think this thing, regulation is about people. And one of the big issues that have been engaging me is the utilization of emerging technology in cross-border payments. Think of how much it costs to transmit $100 from New York to Johannesburg or Harare, for that matter. We have got to bring that cost down.
Mm-hmm. That's all we have time for today. So thank you very much, everyone. Thank you to the panelists. Great round of applause for them. See you again.